afternoon to everyone. Thank you very much for joining us today. I am Ananya Singh and I work with the Ananta Center. And I'm delighted to welcome you all to our special session under the Economy and Policy series. Union Budget 2022, what has it achieved? We run the Economy and Policy Initiative under our public policy vertical. And on behalf of the center, I would like to thank Forbes Marshall for their generous support for this series. We are truly pleased to have with us today our eminent panelists, Mr. Nitin Desai, Chairman, Governing Council, the Energy and Resources Institute, and Trustee Ananta Center, Mr. Deepak Shetty, CEO and Managing Director of JCB India Limited, Mr. Ashok Bhattacharya, Editorial Director, Business Standard, Distinguished Fellow, and the Chair of the Economy and Policy Initiative at the Ananta Center. Furthermore, we're delighted to have with us our moderator for the session, Mr. Govindraj Ethiraj, founder, India Spend and Boom Lights, and Kamal Nayan Bajaj Fellow of the Ananta Aspen Center. Thank you all so much for taking out the time to be here at this panel and for joining this discussion. We really look forward to an extremely insightful conversation today. And with that, I now hand over the floor to you, Mr. Ethiraj. Thank you very much.
Thank you, Ananya, and welcome everyone. We are now T+2 after the budget, and you've had sufficient time to digest it and understand particularly the fine print. And usually it's the fine print that's always worrying or concerning, and it also takes time to emerge. Some of you may have noticed that the stock markets are now giving up a lot of the gains that they had recorded on the day of the budget as well as the day after. So whether that is linked to what the those in the stock markets may have gleaned from the budget, or it's something else, we don't know. But it's a signal that nothing was necessarily going in one direction. But let's try and understand what really happened in this budget. What are the key takeaways? We all saw the headlines about the big capex push. We also saw some of the headlines talking about the lack of maybe sufficient investment in health and education, particularly at the time of pandemic, and whether that reflects a certain thinking. And I think what we are looking for today are two things very broadly. One is to try and understand what is the strategic direction the Union Budget 2022 represents and reflects the mood of the government and perhaps a reflection of the mood of the people. The second, of course, is the more specifics, which is within the economy, the state of the economy, both internal and external, and specific areas since we talked about capex, it could obviously mean areas like capital expenditure, infrastructure, roads, on an area where this government and this budget has bet hugely on, as you've again all noted. So on that note, what we're going to do is I'm going to do is to ask each of our speakers to speak for about 5-6 minutes on their key takeaways from the Union Budget 2022, and after which we'll go into a conversation in which I hope all of you who are watching will be generous with your questions and comments, which will make this discussion and conversation rich. Thank you very much once again. So let me start off by the sequence that I think we had agreed upon. Mr. Bhattacharya, may I request you to go first?
Okay, thank you, Mr. Ethiraj. It's been, in a sense, it's a budget with a difference. And what I would do in the next 5 to 6 minutes is to try to segment this budget under 4 broad buckets, And the 4 buckets are, one is what is the overall macroeconomic stance of the budget. And the number 2 bucket would be what are the expenditure priorities that this budget shows. And number 3 is what are the taxation initiatives in this budget that need to be taken note of. And the 4th and the final bucket would be on what are the reforms initiatives or the reform signals this budget emits. So let me first start with the macroeconomic stance. In brief, this is a fiscally conservative budget. If you look at the way the fiscal deficit path, the fiscal consolidation path has been charted out from 9.2% last year to 6.9% this year, to 6.4% next year, and with a reiterated commitment that the center will reach 4.5% of GDP as the fiscal deficit in 2025-26. The purist will obviously argue that this should have been little more, that this fiscal consolidation pace should have been faster. But given the government's expenditure requirements and the need to do some sort of supply side push, I think this budget has been fiscally prudent in that sense. That's the broad first point. But at the same time, what I would say is this, that the overall assumptions underlying this fiscal numbers is actually there is a gross underestimation of numbers there. If we look at the nominal GDP size that is projected to grow is only around 11.1% growth, and that seems to be a bit of an underestimation. And if we look at the revenue growth are also going to be around only just about 10%. There's a tax revenue growth I'm talking about. So the 10% growth, nominal economy size of 11% growth, compare it with the current year's 18% nominal growth, and the revenue, tax revenue growth was around 25 to 26%. So clearly, there is a lot of upside hidden in the budget numbers. If indeed 11.1% is a nominal growth, which I think is an understatement also, the revenue growth potential of the economy next year would be more. So I think there is a tendency of this budget to under-promise and overachieve. The third point under the macroeconomic stance, I would say, is that it is hugely reliant on a sharp rise in borrowing of 32%, gross borrowing of the market borrowing, both the G6 as well as the T-bills are going up by 32% in 1 year. As a result, the debt profile of the government is actually should have slightly come down. It is projected to go up marginally, but it is still staying well above 60%. Now, the Finance Commission recommendation was to bring it down to 40% over the next few years. So, given the fact that almost 24 or 25% of the government's total expenditure is now spent on interest payments, the government's ability to juggle around with its expenditure priorities as well as its ability to bring down the debt liability as a percent of GDP is slightly constrained. So this is where the macroeconomic position of the budget seems to suggest. Taking forward the expenditure side, I think, as you rightly pointed out, that this is a budget which will be remembered for its capex push, in a sense that 35% capital expenditure rise. It actually is actual increase is 25% because you to take out the one-off Air India infusion, Air India capital infusion. So even 25% increase is a very healthy increase over a 26% increase in the current year. But a point that needs to be noted here is that this capex increase is largely fueled by a 1 lakh crore of loans given to the states, which is a 50-year interest-free loan. So the manner in which it has happened is that the expenditure, the bulk of the increase in the expenditure is not going to happen through the central funding, but through state funding. Of course, the central borrowing will come in. The second point on expenditure, I would say, is this, that the revenue spend is in the budget is only around less than 1% increase. Now that to me again is an underestimation because the entire 0.86% increase is predicated on a sharp cut in subsidies expenditure of around 26%. One can understand the reduction in the food subsidy bill because most probably the government sees there is no need for the food ration scheme to be continued beyond March 31st. But of the fertilizer subsidy reduction of around 28% is actually a little puzzling because petroleum prices are going up and fertilizer subsidy bill should go up unless the government has a bold agenda of pricing reforms by reducing the packet sizes of fertilizer packets and and maybe raising the price in effect. So one does not know that, but this number needs to be kept in mind that the revenue spend assumptions needs some further examination and probing. On the taxation side, what I would say is that there is no change, but then the tax base remains the same in the sense that tax to GDP ratio has made a very, very marginal increase. Actually, it is a decrease, but anyway, it stays where it is. So, which is, in my view, a problem because we need to widen the tax base and raise the tax to GDP ratio. I am a little disturbed by the customs side because once again, the customs side shows that another round of exemptions been phased out, which essentially means custom duty goes up. And this time, the capital goods sector has been brought under the loop in the sense that the import duties on custom duty and project imports, all the concessions are going to be phased out, and a duty of around 7.5% will be imposed. Remember the finance minister's statement, which clearly says that in the government's view, a little bit of opening up, a little bit of restrictive duties on tariff is actually good for the country. So the protectionist trend continues on customs. GST reform agenda, one should have expected that something on GST reform agenda. What is the roadmap for the government, the center on the GST, but it is not there in the budget, which I would consider as a bit of a disappointment. Finally, on the reform side, you have reiteration and commitment to asset sales and privatization strategic. But if you look at the numbers, the government has suddenly become a little more realistic and pragmatic in the sense that there's a huge reduction in the revenues that the government hopes to collect from the privatization process. Significantly, there is no mention of the word privatization in the entire budget this time. Privatization has been replaced with the word strategic sale or change in ownership. Finally, I would just say that there are interesting and positive policy indications on 5G rollout, digital currency, and one will have to wait and see how they actually, those two policies on both 5G as well as the digital currency are rolled out in the days to come. I will stop here. I think I've taken more than my time. So thank you, Mr. Etiraj.
Thank you. So, AKB, can I quickly pose a question to you, and before I go to Mr. Desai, what is your sense on the strategic direction, particularly if you were to look at the previous budget, as in 2021, and what does it reflect? I mean, when, for instance, is the government saying that I'm putting all my bets on capex, and that will in turn lead to trickle down economic growth, expansion, and so on? Because there is this also, among other things, there is a concern of private sector investment which has come down. So what's really what is the thought process if there were one?
It's an important question. It seems to me that the government believes that since the private sector's capacity utilization level has still not gone beyond 70%, the government believes that it is only the government's expenditure which can help crowd in private investment. So, a sharp increase in the outlay for the road sector, actually a sharp increase in outlay for the education sector also. It is to be hoped that the government hopes that private sector will get drawn into the investment loop, so to say. So I think that's the broad message. There is no new major reform agenda. If you compare it with the 2021 budget, I see that this is a far less ambitious budget, except the bit on capex, which is a big increase.
Okay, thank you for that. Mr. Desai, it's over to you.
Thank you very much. Well, let me say that in many ways, Mr. Bhattacharya has focused on what the budget should be talking about, which is how the government raises the resources that it requires and how it proposes to spend them, the numbers, the projections, and the policies. That's what the budget should be about. But it so happens that about 2/3 of the budget speech was taken up by other things, announcing initiatives on animation and cartoons announcing initiatives on mental health, etc., etc. I'm not sure this is what the budget ought to be doing, but budget should be focusing on the issues which have been raised correctly by Mr. Bhattacharya. Let me just focus a little on the issues that he raised. Essentially, the numbers in this budget are going to be proved wrong. The tax is going to be higher and revenue expenditure is going to be higher, which is what the revised estimates will show. The tax is already mentioned that they have assumed an 11% growth in nominal GDP. And remember, the economic survey said real growth is 8 to 8.5%. This implies an inflation rate of 2.5 to 3%, which is, how can you say that now? When the inflation is running at around 5-6%, that this year the inflation rate will be between 2.5 to 3%, which is what this implies. We say 11% is the nominal GDP growth and 8.5% is the real GDP growth. I think basically the tax will be higher, but so will the revenue. If you see the, hello, please don't now. Okay, not now, not now. I'm busy with a meeting. Sorry, that was the telling me that they're getting the IT working. So sorry for the interruption. The numbers will be high, but so will the revenue numbers. You see, for instance, on Narega, the expenditure which they're projected for Narega is way below what was spent this year. 98,000 crores was the revised estimate. The budget estimate is 73,000 crores. And this is an open-ended thing. And it will almost certainly be higher. And it's very likely, as Mr. Bhattacharya pointed out, the fertilizer subsidy will be higher. They have said last revised estimate for the fertilizer subsidies was around 140,000 crores. They provided 105,000 crores. It will almost certainly be higher. I'm not 100% sure that the food subsidy being reduced by close to 65,000 crores is going to work out necessarily. Let us see. It is possible that if they stop this free ration program, it will come to that. But essentially, the numbers are going to be revised substantially, and not just by a few percentage points, but by a significant number, both on the tax side as well as the revenue side. The other point that I would make is the fact that the revenue expense may have gone down, but it is still very high relative to the amount the government raises by way of taxes. You know, he mentioned that interest payments are today 24-25% of the government's total revenue. They are nearly 50% of its tax revenue. If you take the central government's tax revenue, the interest that it pays is nearly 50% of that. So they collect 100 rupees from us as taxpayers, and 50 rupees comes back to us as interest payments on government debt. The net realization is what you should be looking at from the public. It's the difference between the tax revenue that you get and the interest that you pay out, which will go to them. So I'd say that this is something which requires much more systematic attention, quicker attention than has been received. The Finance Commission has been talking about this and so on. The third point that I wanted to make is on the customs duty. And, today we focused on the increase in customs duty that is projected for this year. But if you see the difference between the revised estimate and the budget estimate of for this year, 21-22, is 40%. That is, the revised estimate shows a customs duty collection which is 40% higher than the budget estimate. And normally the calculations of customs duties are fairly precise in the budget. And this is because there is this drive under the Atmanirbharta Maker of India for an increasingly protective trade regime. Is it having a serious impact? I don't know, but we'll have to see. But this is something that we are, in a way, going back towards a protectionist trade regime. On more assessment of the budget, yes, you're right. The key major initiative of the budget is on the capital expenditure. If on the big chunk is on the road on the road works, for instance, and the National Highway Authority, there's a big increase. The National Highway Authority, the increase is from 65,000 crores in the revised estimates to 134,000 crores. That is a big increase in the revenue. The rest of it is all lower. Yes, education is high, but most of the other things are equal or lower than the past. So the big initiative in this budget is the capital. Will that work? Will it stimulate investment? It will certainly stimulate returns for companies which are involved in the construction business. And I look forward to what Mr. Deepak Shetty will have to tell us on this a little later. But will it necessarily generate fresh investment? And where would it generate a fresh investment? It will probably create jobs. That is also true. So this is something which was desirable. In one thing that I would stress is many of us were expecting that because the elections coming up next month, the budget would include a lot of new handouts to farmers and so on. That has not happened. That I think is something one should recognize and so on. So somebody said that maybe they're not planning for the 1922 election, they're planning 2022 election, they're planning for the 2024 election, and hope that the stimulation of capital expenditure, etc., will generate what is today the great requirement in this country, jobs. And in many ways, construction is a job-intensive area. So that is probably what they're counting on, hoping on with this initiative on the capital expenditure. Otherwise, they've done very little on the tax side. And their 30% tax on cryptocurrencies in some ways legitimizes it. Though, of course, I see an announcement that, it doesn't mean we've legitimized it. But how can you say you've not legitimized it if you're taxing 30%? On it. It is true that tax does not imply legitimization. They have taxed people who are involved in, how shall I say, certain services which are not exactly legal. But I have a feeling this amounts to legitimization. And certainly, if you're also going to have an RBI-based cryptocurrency. All in all, the main initiative, the main new thing in this budget is the substantial increase in infrastructure expenditure on the public sector. So let us see whether it turns out. But the numbers, I regret that the numbers have been put this way. I cannot believe that they think these numbers are accurate, because these numbers are not accurate. They'll be definitely higher, significantly higher than what the budget is showing on both the revenue side as well as on the expenditure side. And it's possible that the budget deficit may still remain around 6.4%, but the numbers behind the deficit will be very different. Thank you very much.
Thank you, Mr. Desai. I have a couple of questions, but I'm going to come back now since we're running a little behind our original schedule time for our opening remarks. Mr. Shetty, it's over to you.
Thank you very much. First of all, enjoyed listening to both the erudite panelists. I wish they could have gone on and on, listening to them and their feedback. But probably on this panel, I'm representing the industry, and particularly the industry that I work very closely, the infrastructure industry. So I'll be speaking on behalf of the industry in a sense with that particular outlook. So from our side, I would call this a progressive budget, a strong and consistent infra focus. More importantly, not much of tinkering. Now, someone can say that they could have done more, but I think given the situation that we are in, I think not much of tinkering has been done. I will speak about three buckets. First is the headline announcements, and at a cost of repetition, I will talk about them because it's important. One is the complete focus on capex outlay. And while post the announcement, I know there are views about whether it is 7.5 lakh crores in exact, but last time we have seen an increase of more than 30%, and on top of it, the government has asked, and I fully agree with the assumption that the government wants to encourage the private sector by sort of craning its neck and focusing on investments on the capex side, and I'm sure that this will further encourage more such capex investments from the private sector, which will further benefit. The 60,000 crores announcement for 3.8 crores houses for drinking water, I think is very, very positive. Similarly, the announcements of 48,000 crores allocation for 80 lakh houses, which will certainly be affordable houses, more focused in the, which will create opportunity again from the infrastructure building point of view. I can go on and on because there are some other headline announcements also, whether it is the 2,000 kilometers of rail network. But I would quickly move on to some of the underlying announcements. I think one of the big ones is the river linking project. For years together, though we have been an agriculture-focused economy, I think this is something which has been talked about for a long time. But for the first time, we are seeing an announcement backed with allocation of funds. And we are starting with the Kane-Betwa project. But it was interesting to hear from the Honorable Finance Minister that 5 more DPRs are being created for projects all around India. And I feel for years to come, this will be beneficial because it will again take away that whole dependence that we have on the rains, particularly on those areas. We have seen the impact of the Narmada project in Gujarat, irrigation. In fact, I'm in Gujarat today when I speak to you, and we are seeing the benefit of that. So I think this is something special. The second point, which has been a long pending demand of the industry, is the amount of capital which is getting stuck in form of EMDs. And this whole announcement on surety bonds, we'll see how it is implemented. But from directionally, I think it's a very positive announcement. The third point I wanted to talk about, for years together on government projects, we have struggled with the L1 Raj, where quality has been given a byway. And people grab orders, whether it is on the infrastructure side, and this has impacted. We have seen the recent audit which was carried out, where there was a cost overrun of more than 4 lakh crores on projects. And that is because people get orders based on their L1 bidding and they're not able to meet the commitment. I think this whole focus on getting the quality as a part of evolution, evolution, I think is going to be a game changer. Again, we have to see how it is getting implemented. So these are some of the hygiene issues. Government has also focused on further investments from PLI point of view on the solar side. We know the government is very keen, and some of the announcements on during COP26 support. Sovereign green bonds to be issued again will kickstart more activity on this front, and I think this is the need of the hour. Mr. Bhattacharya spoke about fiscal consolidation plan, and I think again I want to compliment, probably with the challenges that we have seen as a part of pandemic, and also looking at what is happening on the political side. Probably it would have been easy to be a little more ambitious with more populist scheme, etc. But government has stayed away from that, so that is positive. If I quickly move on the second part on some of the misses, I would say, and I would really support the point on Manrega. After the first wave of pandemic, we have seen that the funds which are infused in the rural India as a part of Manrega really helped support the rural masses, created employment on the rural side, and this really helped us make a comeback after the first wave. This was further supported by some of the loan moratoriums, etc., which has not happened, and this has put some challenge. The second point I wanted to talk about was on the healthcare infrastructure side. Particularly during the second wave, we have seen the challenges, and we work very closely with our customers in the rural side. We have really seen families after families getting heavily impacted for it's not only about oxygen, but non-availability of the healthcare infra. So we would have expected some more, though it's like 86,000 crores. It's not a small amount, but we would have expected it to be a little on the higher side. The third one, which I was a bit disappointed, was there was not an important mention on this huge commodity increase that we have seen. And here I want to talk about particularly the steel prices, the way they have increased. And part of that is also because we are limiting the import of steel from outside. And this is really creating a lot of problem, not only for OEMs like us, and particularly for people like us who also export a lot, but also for our MSME partners. And they are literally getting ground on one side from the pushback from the OEM side of not giving them price increases, but at the same time carrying the burden of the commodity price increase. So we would have thought that maybe there would have been some focus on this side. So this would be my initial comments. Headline announcements, very positive. some of the long-time hygiene issues, particularly surety bonds, and also the river linking projects, etc., are very, very positive. But I feel there were something more to be done, particularly to support the rural economy.
Thank you so much, Mr. Shetty. So before I come back to the rest, quick clarification for me and for anyone who's listening. The L1 part, was that a budget mention about, or did it happen earlier?
It happened earlier, but as a part of the budget, she also spoke about inclusion of quality as a part of analysis of bids. So
Right.
it was an indirect mention to that. I think there was a notification issued in October which spoke in detail about this, but this was further reinforced.
Right. Okay. Great. So let's pick up on a couple of themes, and I thought maybe we should start with jobs. And let me come back to Mr. Bhattacharya, and I'm going to pose the same question to all of you, and it would be interesting to see how you look at it from your vantage point. So, one of your columnists in Business Standard has pointed out that some 200 million jobs have disappeared in the last 2 years. We do know that there is a serious problem on the consumption side. There is a problem when it comes to inflation, which of course has come later. But people have either seen a drop in incomes or people have seen their incomes gone away, and it's not clear how many people have got it back. So, whether in the context of the budget or not, where do we stand on the big jobs question, and is this the budget approach to solving it through capex and so on sufficient, or should we have or would we have expected more?
Well, if you want me to answer this question, I will say that the budget initiative on capex will go only some way in addressing the jobs issue. And if it is addressed towards the highway sector, and if the money that has been given is not to clear NHAI's debts only, I would imagine that we will see more roads being constructed. The targets are huge. It's a 68 kilometers per day construction target and under the budget. So it will create jobs, no doubt about it. But to understand this question about jobs, we need to realize two other things. One is that where have the jobs gone away? The sectors that have been hit by jobs is actually the unorganized urban sector, where you don't see those jobs anymore. The second aspect we must recognize is that the nature of the economy has changed, is changing, and in a large number of areas, sectors, industries, the job opportunities that existed in a certain way no longer exist today. So what are we doing to train and educate our youngsters, young population, to be used for that kind of jobs which are coming up now? So I think the job challenge is not just about creating jobs, but also preparing the younger population to be useful with proper skills in the new kind of jobs that are going to emerge. Yes, the budget addresses the basic requirement of creating jobs by investing more in capex. But I think the job challenge is far, far bigger than what we think the budget can address.
Could we have done it, for instance, there was a feeling that, there should have been some urban Narega. Maybe that was wishful thinking, but in effect that people were asking whether there could be some kind of dole for those who've lost their jobs. And secondly, could this budget then, as you say, have directionally set the, showed the path towards upskilling, rejigging the economy, but we didn't see any mention in that area either. So, is this government concerned about jobs, or does it believe that what it's doing is sufficient and will therefore solve the problem?
I don't think that the government has thought it through, at least from the budget. One can make out that government has not really thought it through. The government has just taken the first big step. that let us spend more on the infrastructure side, which will create a lot of jobs in the construction sector, which is also a kind of a low-end jobs where, and it is in many ways it is an urban issue. So the roads are being constructed to connect cities. So I think the long-term challenge for jobs is actually in how do you improve the skilling part of the economy? How do
Right.
you train, retrain? In that area, except the National Education Mission getting around 30% more money, I don't see any other initiative has been taken to address that larger challenge of creating jobs and training people to be ready for new jobs.
Okay, Mr. Desai, over to you on the jobs question.
I think basically a good way to start is to ask yourself which are the jobs which were lost in the 200 million. The first category is clearly construction because there has been a severe fall back in construction. In fact, a lot of the people who migrated back to villages were construction laborers. This is the part which will probably be assisted by the capital capex program that we have. But if I see the other sources, the second major source of job loss has been small scale companies which are involved in supplying consumer goods and services. Now, that is not picking up because consumer demand is not picking up. I mean, one of the things that the National Survey shows is that the one area which has not gone back to pre-pandemic levels is private consumption. But apart from that, I think people are being a little cautious, and that is the second area. The third area which has been affected in jobs, which is not going to get restored that quickly, are the contact-intensive jobs. The people in restaurants, people in hotels, and similarly, that sort. That will not be affected. A fourth category of jobs affected are those which are affected by how we responded to the COVID, the lockdowns and so on. I'll give you a small example. I was in Bombay, and there was a man there. He says, "I'm absolutely finished." I said, "What do you do?" He says, "I ran a bus service for schools." And for 2 years, he has had no work because schools have been shut and the bus service is not being used. So, in a sense, when we address this problem of the job loss which took place because of the pandemic, let us look at that. Now, that's of course not all that we are talking, because there's an underlying core problem of employment in this country, and there issues of skill. Yes, jobs are being created in the digital economy. Jobs are being created in the logistics of e-commerce, for instance. But there is a mismatch of where the jobs are created and where the unemployed are. The unemployed are all in North India, mostly. The heavy demographic dividend is in UP, Bihar, Madhya Pradesh, and Rajasthan. The jobs are being, the people are required in the south and the west. That's this mismatch is where it has to be corrected. So that's a bigger problem. And I don't expect one budget to solve this. But I wish the budget had done a little bit more on the COVID-related job losses which took place, by some more specific initiatives,
Right.
Beyond this.
Right, and I'm going to come to Mr. Shetty in a moment. AKB, can I come back to you? So, somewhat political economy question. Just a few weeks before the budget, we saw this big fracas in Bihar. Millions
Yes.
applying for a few thousand railway jobs, which is symptomatic of the problem that we are discussing today. What is the political economy view on something like this? I mean, when I say this, I mean the budget's seeming non-response to the jobs challenge.
The larger question that has not yet been addressed is that getting far more number of people who are wanting a government job with the sort of pension benefits which the system can offer. Now, these are the people who would love to have a government job because the government job is requiring a set of skills. Now, we have not really trained them in other skills. I see this as a failure to reskill or create those vocational job training avenues and skills institutions to train these people. I mean, people in Bihar and UP, why they are going in for railway jobs? Because they are just seeing it has got the comfort of a government job. Now, if you take them and you give them an opportunity of being, a vocational training, I'm sure the problem could have been solved. At least, some, you could have made some progress. But
Right.
unfortunately, this is not what has really happened. We have stayed where we are. Our education system is creating, if I may use that word, more and more number of clerks. We need to create more people who are skilled in a certain profession.
Right. Okay, Mr. Shetty, to you, the jobs question.
I feel the whole emphasis on capex is about creating the whole cycle. I spoke about it earlier, and it is not only the government's or the private sector to invest. If I talk 45,000 kilometers of the road, that is really going to be a multiplier. And are you able to hear me? Sorry.
No, it's your voice is breaking a little bit, Mr. Shetty.
It tells us why infrastructure is so important. In spite of being in the heart of Gujarat, we are seeing infrastructure challenges. I'm not able to connect well. So,
Okay, let me come back to you. Maybe you want to re-log in. Let me come back to you. We've got a couple of questions, and this would be a good time to launch into them. Suman Berry asks, and I could pose this to Mr. Desai and then to AKB. Has the twin balance sheet problem of the banking and private sector really been solved? Are the banks, NBFCs ready to lend? Question mark. Is there a large overhang of zombie firms who cannot meet their debt payments? Mr. Desai, first to you.
I'm not sure about this. This is in some ways a factual question about what the zombie firms, which I would not know about. But the fact is that the budget has launched this bank, and they made a provision for that. I also believe that there has been some reduction in NPAs. The numbers came out a few days ago, and it shows that. I have a feeling that if it is possible that in some ways the worst on the NPAs is behind us. Most of those NPAs, the old infrastructure projects, and perhaps because of the monetization scheme and so on, things are cooling down. We are probably now more in a situation of some unresolved old NPA problems, and that so I have a feeling that the NPAs are not going to be as critical now as they were 2 or 3 years ago.
And there is no support for public sector banks, as some people were fearing in this budget. I mean, there's no overt support for public sector banks.
Well, they're basically going in for mergers. Their solution is to for significant mergers of banks.
Right. Okay.
That's what probably the answer is, which the government will give. But let me say, this is, as somebody who's normally quite critical of government, this is not something that I personally am that concerned about.
Got it.
But I do believe that the situation is getting under control.
Yes. AKB?
Well,
One very
my
quick.
sense is that NPAs have come down. They have not come down to a level which can give us comfort. And the creation or the setting up of this National Asset Reconstruction Company, which is once again will be controlled by the public sector banks, will go only halfway in my view, because you still have resolution of those sticky assets, decision to be taken by those public sector bankers who come under the provisions of the 3Cs. So therefore, to what extent those sticky assets which have been transferred, we are told that about 50,000 crore of assets have been transferred to NARCL. Now, no decision may be taken very easily. So while the problem has been shifted out of the balance sheet of these public sector banks, but the real resolution or the haircuts have not been actually considered as yet. So the real benefits of this will come over a period of time, or may not even come. But on the question of whether the
Win balance.
company, the asset, the bank. I think we have strengthened the insolvency and bankruptcy code in some ways, but also introduced some forbearance policies of forbearance, which I don't think has done very good. The idea should be to strengthen IBC even more and make sure that companies that go sick or their loans that go sick can actually are resolved through a transparent IBC process.
And a somewhat allied point is that a 6 month deadline for companies winding up, which the budget talked about, which could
Yes.
hopefully speed up things and clear up.
Yeah, that's right. That's right.
Okay, here's another question. It's anonymous. Is the problem of not enough jobs also exacerbated by the low labor force participation rate that seems to have fallen below 50%?
Well, how could the fall in the participation rate worsen the problem? But there is an issue there, and particularly on female participation. India has an exceptionally low rate of female participation in the workforce, and it is possible that this lowering may be a symptom of the lack of jobs. That people just don't show themselves as available for jobs because jobs are not available. And this is probably also what lies behind the rather low rate of female participation that India has. It is lower than Bangladesh, much lower than Bangladesh, in fact. So I'd say that there is some merit in that question. That it is possible that people have dropped out of the labor force.
Right.
Jobs are not available.
Right. Mr. Shetty, have we got you back?
Yeah.
Okay, I can see Mr. Shetty.
Yes, yes, I'm
Yeah,
back.
go ahead. Yeah, go ahead. Sorry, I was I had posed the jobs question to you earlier. So if you want to round up your thoughts and then.
I think this whole focus on capex first, but more importantly, the whole focus on infrastructure is certainly about jobs. On top of it, when we look at this whole announcement about connecting 6 lakh villages through optical fiber, if you talk about the Har Ghar Jal program, this is all about going further in the hinterlands. And I'm sure, as we all know, this focus on infrastructure, on top of it, 25,000 kilometers of expressways create job. I'll just give a simple example. For every JCB machine which is sold in the market, there are straight away 5 jobs which are created. And if you look at the further ecosystem, there are 10 more jobs which are created. So I think, and if you take a step back and think what else the government can do, in the given situation. So I think it is very healthy that the government has looked at really creating the multipliers in the economy, and I'm sure it will benefit. One of the points which was made about the point which was made about less participation of women in our workforce, I think that's a challenge, and I'm sure as an industry, all of us can take steps in that particular direction. It's an important responsibility. The other point which you earlier posed a question, I want to talk about it. This whole thing about people going for government jobs, etc. I feel there are enough opportunities in the private sector. But as Mr. Bhattacharya rightly mentioned, I think sometimes the lure of the pension, etc., probably sometimes the different work environment compared to the private sector also creates. But I was recently very surprised in the remote parts of Kerala or Karnataka, when I have interacted with the operators who are running our machines, invariably I find that they are from Uttar Pradesh or from Bihar. So that whole migration of skilled people is taking place. People are moving around, but I'm sure we can do, as was rightly mentioned, to skill them more. And I think that is a responsibility that the industry carries.
So, how would things have been for you in 2019 versus how they are today?
From the business point of view, you are saying?
Yeah, and maybe linked to jobs as well in terms of machines sold, amount of work that those machines are doing or have been doing, particularly through pandemic and the recovery today.
I would say that during the course of the pandemic, if I quickly look at the year to 2020 and 2021, 2021 and more or less they were on the same lines. The difference between 21 and 20 was in 20, after the first wave, as I was telling earlier, with all the initiatives that the government took to sort of support the rural economy, we saw a very good uptake. It continued up to quarter one or quarter four as a financial year of 2021, and after that, obviously, the COVID stuck. But we have seen that it has not because this time we didn't have strict lockdowns, etc. We have not seen a huge challenge. But the only place where I have seen challenge is the uptake on the rural side. We have seen the decision makers, and this is something which I observed when I interacted with the customers. Many times we forget that the decision makers in the rural areas are an elderly uncle or the head of the family, more sort of not nuclear families. And when that particular age group people either got impacted mortally or from the health point of view, it has completely stopped the decision making, and that is something which has impacted us. And it's very somber to interact with customers who you have interacted for so many years, and suddenly you find that they are not there. So this is something there. The COVID second wave certainly has affected in the hinterlands. And that is why I was alluding to more investment on the rural healthcare and that part. But overall, I would say, still considering all the challenges, I think the business has been pretty steady. Obviously, you would want to do more, but compared to 2019, maybe around 10% lower, but more or less, much healthier than what we would have expected, considering the pandemic.
Right. So we've got a lot of questions now coming in, and I wanted to touch upon inequality. So, but let me just leave that word with the panel and come back to it a little later. Paresh Parasnis asks, it would be interesting to hear the panel speak of the interest rate and inflation scenario and its possible impact on consumption, expenditure, and private investments. AKP, do you want to go first?
Well, I think interest rates will remain elevated going forward. I think the RBI Monetary Policy Committee will take a call on it. They may not immediately raise the rates, but clearly interest rates environment will not be that accommodative going forward. I don't think there is any debate on that issue anymore. I think linked to that is the question about inflation, the manner in which it is not just a question of crude oil price direction, but also about the geopolitical situation across the globe, with a possibility of tensions on the Ukraine-Russia border, which actually has got many pipelines, oil and gas pipelines. Now, if they are affected, your crude oil prices may not just stay within the $100 a barrel zone, may even go far further. So there is that inflation fear or concerns. Interest rates going up is I think will be par for the course in that sense. So in both the areas, I would say that we need to be mindful, and which is why, as Mr. Desai rightly pointed out, that the budget's assumptions on the nominal GDP size is completely, underestimated the inflation deflator potential for the nominal size of the economy.
Right. And let me put the second part of Parasnis question to Mr. Desai. So, on your prognosis, perhaps, on the impact of all of this on consumption, expenditure, and private investments.
I would say that basically one of the things which I still find a source of pessimism is there's nothing that has happened which will revive the growth in private consumption. And the threat of inflation arising from not just the oil thing, but also the heavy borrowings of the government, etc., is there that I don't see a boom in private consumption taking place just as yet. Investment, it's very difficult to see investment growth if capacity utilization is in the 65-70%. I think it's below 70% according to the RBI number. It's very difficult to see that happening that quickly. So that's fine. I mean, why should you expect companies to invest if they're not going to be able to sell? That does simply to more NPAs. So it's not a bad idea if they delay their investments a little till the demand starts. But the demand revival thing is not there. And that is something which everybody is looking forward to. And that has not come. And maybe one reason why your stock market is correcting itself is now people are realizing, well, we really don't see where the demand growth is going to come from.
Right. Okay. So, Mr. Shetty, let me bring the point about inflation, but from the point that you link it with the point that you made about price increases in commodities. Tell us about how that's playing out, and what are your concerns going forward, and what could be, if anything, done about it?
Yeah, I spoke about it earlier. I think we certainly have to take a look at the way the commodity prices have continuously gone. And I think there are certain measures which the government could have taken, particularly, the restrictions of importing some of these commodities that we still have. And at times, we see almost from some countries almost as a dumping kind of thing, which is presently going on. So some of these things probably need to be looked at with magnifying glass, and I'm sure there are opportunities to bring some correction. As I said, inflation certainly is a worry. We have been dealing with it as an industry for obviously more than a year now. And sometimes, as I said, there's only that much that you can pass on to the customers. Um, but the only positive part of that is that you also challenge your internal processes, systems, and try to see how we can take further cost out. And that is probably one thin silver lining. This has helped us again become more competitive. And if I talk about our industry, one of the positives from the crisis is the huge opportunity for us to export. In fact, you talked about business. I failed to mention, but our exports have grown by 300% during last year, further expanding opportunity export. So I think while the government should take some action on this front, I'm sure there is a responsibility on the industry side also, particularly my friends in the industry who have been really benefited from the steel industry, etc., to sort of pare down this a bit and make it more economical for everybody.
Right, and exports is an important point. So there is a sense of let's say happiness maybe that India's exports have done very well. But the question equally that comes along with it is, will it sustain even as the developed economies maybe start cooling off the post-pandemic heat? What's your sense?
Is it for me?
Yeah, you first. Yeah.
Yeah, no, thank you. I feel what the cooling off, etc., I think has been factored in. But as we speak, the amount of infusion of funds, etc., and particularly rolling out and focus all countries. If you look at America, they're talking about $1.2 trillion of investment in infrastructure. I think the route that most of the major economies have taken of investment, particularly on the infrastructure side. If you look at UK, investments on HS2 high-speed rail lines, similar investments, announcements in both France and Germany, huge investments on the agriculture side. I feel the whole opportunity to export continues. When we see the demand versus the capacity, particularly in the Western world, I think there's a lot of opportunity for Indian companies who are focused on export to the developed part of the world. I know there are challenges in other parts of the world, but at least in the developed part of the world, I see in the short-term future, huge opportunity for exports.
Right. AKP, is it your sense that exports will sustain at the record levels that we've seen very lately?
Well, exports will not be able to record the kind of growth that we have seen in the current year purely for statistical reasons. But I think the COVID situation and given the Indian manufacturers, particularly, an opportunity to plug themselves into, the supply chains of the global supply hubs. One can see that this is happening. But there are, in my view, policy hindrances. And the policy hindrances come mainly because of the approach to customs duty regime, and also there is this tendency to provide in the name of Atmanirbharata, you are actually encouraging inefficient domestic production with higher costs. So I think if you want to be competitive in the export market, you have to be freed up to face up to competition, and that competition, that desire not to face competition, cannot cannot be protected by higher tariffs. Having said that, I think once again it's important to recognize the importance of vocational training. I mean, the opportunities will obviously open up, but if you are not investing enough in the primary, secondary education, but rely only on setting up digital channels of television and hope that that will serve the purpose of education, I think we will be missing the bus.
Right, and that was another key announcement in the budget. So let me take some comments that have come in, and I'll just take them as comments and come back to the questions. Roshan Toshniwal says investments in urban infrastructure has also reduced, while Amrut and smart city budgets have slightly increased. Unlike the last budget, which allocated money for buses and metro, this budget was muted in this space. Gurdeep Singh says the investment in infrastructure and employment and income created by this should certainly result in an increase in rural consumption, which volume growth for FMCG or fast moving consumer goods is currently not there. So, yes, consumption growth is indeed addressed in this budget. Let me pick up another one. MP Bezbarua says highest job loss in unorganized sector, and of that in the sector that provides 10% of total employment, that's tourism. It does not find any mention. Providing infrastructure status to hospitality would have boosted investment and jobs. Here's a question that I can maybe pick up, though I don't know if anyone has specific numbers on this. Akshat Singh Kavya asks, the government has used WOOD, the PLI, the productivity linked incentive scheme, as a game changer for our economy. Has its progress really been sufficient that we can pin our hopes to it? AKB, would you want to take a stab at that?
No, my view is that the PLI scheme, as a national economic security mission, probably is a good idea. But if this PLI scheme, because it is popular, because it is domestic industry is very happy, and some investments are coming, become an instrument of industrial policy, and it becomes, is extended to each and every sector, I think we would not encourage competitiveness and export capabilities. So therefore, a PLI scheme needs to be used selectively and focused on things like, let's say, on photovoltaic fuel modules. I think PLI for that is understandable. PLI for mobile devices, maybe you want to do that and you want to be a global champion. So therefore, PLI, to the extent that it is used for furthering the cause of your national economic security mission, this is all right. But making it part of your overall industrial policy is probably has some dangers in that.
Right, and that's a useful caveat to keep in mind. Here's another anonymous question. India intends to emerge as a major force in research, technology, and innovation in the international scene. How does the current budget support this admission or ambition? And I guess the question is, does this current budget support that admission? Mr. Shetty, do you want to try that?
Yeah, I agree that there are not very specific announcements, but some of this focus, for example, on drone, on some of the the new technology areas, and also if you go back to the PLI scheme for particularly the auto sector, which was announced, it was not about the run-of-the-mill components, but more advanced technology value-added components. So maybe not specifically in this budget, but that is probably the direction that the government is taking to encourage the industry to invest more into the new and advanced technology, which I'm sure will spruce up R&D.
Okay, Mr. Desai?
Yes, I would say that I should have mentioned one thing which I rather liked in the budget was the proposal to bring the private sector more intimately into the defense research and production side. That announcement was made. They're going to increase the participation of local production from 58 to 68%. But more than that, they also said that they wanted to connect defense research better with the private sector. Now, this is very important. If you look at the history of technology development in countries like USA and China, The starting point was defenses, including for the internet. The internet started as a defense research project under DARPA. So this is something that I've learned. Can I just quickly, if you don't mind, a quick word on the PLI? In many ways, what India has to understand is that the world is a global value chain system. We are not doing enough to be able to participate in global value chains. This is and what we should be doing is not just simple-minded domestic production, but domestic production which is competitive globally and can participate in a global value chain. You mentioned mobile phones. Fine. PLI mobile phones is helping domestic production. I'd like to see an approach which also ensures that 5 years from now, an Indian mobile phone manufacturer will be a global competitor with the people who are out there. That is not yet on the cards. Not yet on the cards. So I would say that our focus should be global competitiveness. And by all means, to research things, by all means, try things. PLI, I'm much more skeptical about PLI because historically, India has not been good at choosing winners. The government of India has not necessarily been good at choosing winners.
Right.
Winners are good at choosing the government, but that's a different story.
Right. So, you talk about the protection or tariffs which have risen in recent years after almost 30 years and continue to rise now. Is there a flip side to that thought? I'm just wondering. I mean, I can see a lot of people I'm talking to aligned on the view that it should not have been increased and we should have been continuing to push towards, as you mentioned, a globally competitive economy. But what could be the flip side to that thought?
Short-term gain is a flip side. That there's a short-term gain, possibly. That you shut out the Chinese supplier type of thing. Though you'll not shut out the Chinese supplier. Let me guarantee that those guys will simply reduce their prices and compete. But the fact is that there may be a short-term, but the long-term strategy has to be that. That is what the other countries are following. China has global players with global banks. We don't have any. This is what I would worry about. But that's why I welcome the government's announcements on connecting defense research and development better to the private sector.
Okay. A comment
coming on that point. Sorry.
Go ahead.
Yeah. While I respect what Mr. Desai says, but in the short term, we are certainly seeing a lot element of dumping which is taking place, and this particular thing that we are seeing, it is not an sort of a normal economic expansion. There is a lot of state support which happens behind it, and something that we have to be very watchful of. If I talk about my industry, that's the construction equipment industry. Now the Indian industry is the third largest in the world. Mr. Desai spoke about quality. I want to very proudly mention to you, we export to more than 110 countries from India. And normally when we talk about exports, we talk about exports to Latin America or to Africa. But we are exporting machines built in India to North America, UK, Europe. And one important change which is taking place is the change in emission norms. And as we go up the cycle of that emission norm change, more and more global markets are opening out for Indian manufacturers, both from the OEM side and from the component manufacturing side, even engine manufacturers, etc. But on the flip side, what we are seeing is, because of some of these open doors, we are seeing that people are really taking advantage. While you don't get access to their markets, but they are completely using these doors. And my worry is, our industry is still in nascent stage so far as export is concerned. And if these issues are not looked at more carefully, it can, literally kill this industry in its infancy. So something to really be very cautious of. I know that over a long term, it has to be opened out more, but particularly in instances, and probably that is why there is a bit of conservativeness while signing up some of the trade agreements, etc., because those can be sort of backdoor routes for people to dump. And that is something that as a government, as people, we need to be very careful of.
Okay, any quick counters to that or different points of view? AKB?
No, let me say that I congratulate JVC and there are others. There are one of the successful areas of Indian growth has been automobile components. This is an area which has been a successful area of global competitiveness and export growth. We should ask ourselves how that happened and why it happened. And today, it was because we did a very good job of connecting the value chain within India and the Indian at the end product demand grow, and that created a competitive. Incidentally, a large number of the component manufacturers have a strong foreign connection in terms of technology or even ownership. But it's there. Now let's ask ourselves why this happened. There are certain areas which has not happened. I'll give you an example. We are a major pharmaceutical exporter, but all the primary products required for manufacturing medicines today we are importing from China. Why? Why is it that value chain has not been integrated as much as, say, the automobile value chain has been integrated? And third, connecting globally. Electronics is a global value chain. We must understand that. It's quite different from heavy machinery. It's a global value chain, and you can't just have an isolated country doing its own electronics industry. It must take semiconductors. 90% of high-value semiconductors come from two companies, one in Taiwan and one in South Korea. 90%. But people, this is the thing that you must understand. This is a very, very global industry, the electronics one.
And some of the big semiconductor investment announcements only in the last few weeks have come in the United States from Samsung as well as Intel.
We've announced 10 billion as what we are going to give under PLI. The one company in Taiwan which does this has announced 100 billion.
In Taiwan itself, or
in Taiwan, no, all over.
All over the world.
100 billion is what they're planning to invest, and we, as a whole country, have committed 10 billion.
Right. And in any case, I mean, it is happening in the United States is for sure seeing fresh investments, and that too in states like Ohio, where Intel is investing, which just shows how things are moving. AKB, yes, you want to come on that?
Yeah, I wanted to come on that. I can understand why industry is keen and wants tariff protection or tariff being raised somewhat. And that is because tariff is only one part of the game of becoming more competitive. Yes, tariffs must be reduced and made part of the entire competitiveness drive. But along with tariff reduction or moderation, we also need to do a lot more on the way we do our infrastructure, the way we manage our government compliance system. So I think some work has happened in terms of compliance improvement, but I think we are still way, way behind the infrastructure areas.
Right.
So unless we look at it in an integrated way, I don't think we will be able to win this battle of pro-tariff and anti-tariff issues. We have to reduce tariff. Along with that, we have to make sure that infrastructure, economic infrastructure, and even social infrastructure, things like water, school, and health, they also be improved so that tariff reduction is possible without complaint voices from industry, which I understand why it's coming right now.
Right. Okay. So Sridhar Venkateswaran has 2 points, including one question. He says the disinvestment figures, revenue estimates versus budget estimates, are they comparable given that monetization assets are included in budget estimates? AKB?
No, I think they're comparable because both RE and the BE have the same element of monetization asset figures. So they are comparable. What is important to note in the revised number is that in spite of the LIC IPO going through this year, the government is very, very conservative in projecting a figure of only 78,000 crore compared to around 75 lakh crore. So clearly the markets, I think the assessment that LIC issue may not be of 10% or maybe of 5% is very clear from the budget numbers.
Right. I think on targets for disinvestment, it's several times bitten once shy. So
That's right.
Sridhar also says, overall, if the numbers are going to be way off in terms of revenue and expenditure, is the overall impact likely to be an upside and hence money available for vaccines and social sectors which have seen big cuts? Or if I were to add to that, where could the money come from if we were to see a wave 4 or wave 5?
I
Well,
think basically
before Mr.
I
Desai
think
comes in,
my feeling is that they're basically aware, and they've put in conservative numbers because they know that this is likely that we may have to provide for another 30, 40, 50,000 crores of revenue expenditure sometime in the course of the next year. So my guess is that they have been conservative because they think it is going to be there.
Yeah, are you referring to the health and vaccine context or in
Well,
general?
it could be. It's very open-minded. You see, if you get another wave, it won't be just health and vaccine. It'll also be Narega. You know, it won't be just that. It'll be more than it'll show up in more than one area. That is, I
Right.
think that is probably there.
But
The other thing is, I think they have to accept that basically that fertilizer subsidy is going to be higher,
okay,
much higher.
as you mentioned earlier. AKB, before you continue, and let me add to that question as well. So there is a kind of continuous or running vaccine expenditure, and there is the cost of booster doses, which most other countries are now obviously factoring in, and the cost of that will be substantial. It's been a year since many, maybe in the first round at least, got their first doses, and in the next year or so, many people should be, in all likelihood, be gearing up, or at least medically speaking, be ready for the booster doses. That's going to cost. Now, this is apart from potential fourth or fifth waves. So, what's your sense?
no, my point was that whether there is an upside in the revenue or not providing adequately for vaccination for next year, in my view, is not a prudent move at all. Even if it meant that the fiscal deficit would have gone up to 6.5% or so, or 6.6%, I think not providing adequately for vaccination is not a prudent move, not a proper, good signaling for a country that has done quite well on vaccination in the current year, and not providing a game plan. And as you rightly pointed out, that will be a need for a booster dose, and by not providing, actually a government is giving rise to speculation whether what kind of government support will be made available for vaccination in the next stage for the booster doses. So therefore, I think this has not been a prudent move by not providing adequately for vaccination in the budget.
Right. Okay, so let's take a question from Kanish Kwijir, which also can lay the framework for the larger hits and misses question that I'd like to pose to all of you as we head towards a close. Kanish Kwij says, as pointed out by Mr. Nitin Desai, many political pundits have said the budget is more over for 2024 and not 2022, referring to the legislative elections coming up. In the sense that the government might try to show its GDP is growing exponentially, where does this leave the government's ambition of making India a $5 trillion economy? Are we achieving our target at a much faster or slower pace than expected? Of course, the $5 trillion figure I haven't heard for some time. Mr. Desai, it's over to you.
Well, I just heard it the other day. The new chief economic advisor said it will come in 2027 instead of not 2024, 25. So the chief economic advisor was always postponing. And he was very careful. Oh, in nominal terms, he said, not necessarily in real terms. So I would take these things. You can't run a country by putting a number like that and then say, let's work to that number. You have to work in terms of the things which influence people's decisions about investment and consumption. So I frankly don't care whether the number is right or wrong or whatever it is. It's not a very useful number to project. And
Okay.
the chief economic advisor said 2027 and in nominal terms.
Okay. Okay. So I'm going to try and get your sum ups, but before that, I thought we should at least pay respect to one term, which is inequality. Going into this budget, there was some discussion about inequality, and I mean, even not necessarily linked to the budget, but in general, There've been reports world over now about rising inequality, and it's what that's leading to, particularly in the fact that we've seen so much of wealth being created in the hands of a few. A lot of that wealth is, of course, as they say, paper wealth, but it is wealth nevertheless, and the differentials now are perhaps too stark to be ignored. So, is that something that we could have addressed in any way? We should have addressed, or is that something to be left for a later stage? AKB.
Well, I think, I mean, the government's political philosophy is not to tax capital or tax people. If you look at the manner in which the taxation policy has been used by the government, it has actually been a giveaway government in terms of taxes. So it's a fact that this was probably a year. Why this year? Probably the last year was the right year, where you could have introduced some sort of tax by which the super rich, so to say, the transfer of assets or capital gains there could have been brought under a kind of a levy which would have given government more revenues, and that inequality issue could have been addressed to some extent. But I don't think the government's political philosophy is to tax capital or tax people as such.
Right.
So this was not done this year also, in my view. Whether this will, and this is the reason why I say the tax to GDP ratio is actually not growing very much. It is remaining at the same level. So that's the way I see it.
You can't tackle inequality without tackling what leads to that inequality. There's no such, just putting a little bit of tax, a little surcharge is not going to solve it. You have to address yourself. Why is this inequality arisen so much? And unless you tackle that root, you will not tackle inequality in India till you get a social democratic government. And whether that will happen in my lifetime, I don't know. But because ultimately it's not inequality, it's the underlying social and economic factors which lead to these differences, which need to be addressed. And that will not be addressed by this government or any other government. It will only be addressed when you get a social democratic government.
Okay, I'm going to ask now all of you to quickly sum up and maybe talk a little bit, a minute or two, on what you would expect in terms of policy direction as you look ahead, with or without the budget, given that the budget has happened or not. Mr. Shetty, can I start with you? As you look ahead, and you look at economic growth and activity picking up, some of that capex becoming reality, jobs being created. What else?
Yeah. When I look at the budget, I think there are certain announcements which have been made, and maybe not for the short term. First of all, this whole talk about the Gati Shakti project. I think the Gati Shakti project brings the whole investment under a sort of a digital map. And that is something which may not impact on the short term, but having attended the whole launch program, having understood what the government intends to do, I think that is something for the future. And by including the mention of Gati Shakti in various announcements that the Honorable Finance Minister has made, I think this is going to be a sort of a seminal project. The second announcement, which is very, very heartening, during the pandemic, we have seen that the supply chains lines have been heavily impacted. Now, when we talk about exporting, one of the biggest bottlenecks that we see is the whole logistics infrastructure that we are having. The clogging at the ports which is taking place, the big ocean faring ships not coming to the Indian ports. We have seen a lot of these challenges. So this whole announcement about 100 Gati Shakti cargo terminals over the next 3 years, I think is going to benefit. So these are some of the announcements that I feel are more for the future. And I'm sure the investments on road infrastructure, and which is something that we still have lots to do. I was recently seeing a particular chart which had 4 boxes, where we stand from the point of view of road infrastructure, where we stand from the point of view of ports, where we stand from the point of view of railway. Everywhere we see that we are number 10 or number 15. So for a country of our size, for the country with the aspirations that we have, I feel there's lots to do on the infrastructure, and I'm absolutely confident that the government has set the pace, and I'm sure in the future, no government, whichever political party, will be able to take their eye away from this whole infrastructure development theme. So that is what I look forward to.
Right. That's a great note to conclude your part. Let me now hand over to Mr. Desai.
Well, what is it that I would
Outlook.
look for?
What's your outlook as you look back and look ahead? What are the things that are going around in your mind? What do we still need to do, which that can be done?
I think what we need to do is basically on which has not been done is on tax reform. And I'm afraid that's not going to get done for quite some time, because next year they won't touch it, because with an election due, nobody's going to touch it. So for 3-4 years, you're not going to get any significant tax reform. So this is a disappointment, because we are badly in need of that. So this is on the plus side. I'm happy at the attention they're giving to to research and development, because this is an area where we have fallen behind more than we ought to have. And I hope that this really picks this up. And this is something which is not controversial. They can do it, and I hope they do much more on this than we have done so far in the past.
Okay, thank you very much, Mr. Desai, as well. AKB, last word.
Well, my outlook, or the sense I get, is that the budget philosophically is in the right direction of spending more on creating capital assets. But I think going forward, we need to widen the definition of what is an asset. And I don't think it is enough to just focus on economic assets, hard infrastructure. It is equally important to build the muscles or sinews of the social infrastructure, which is education, which is health, which is water. And I think we need to pay equal attention and more stress and emphasis on these 3 or 4 non-economic infrastructure, which have a very important bearing on economic infrastructure and growth per se.
So is that is that something that you're linking to the budget? I mean, or is it something that you're making as a general?
Well, I think the outlays and the allocations should reflect that. Right now, you don't see any added emphasis on these areas, except this year we saw a sharp increase in education outlays. But I don't see it in the health outlay. There is the river linking project, but there are a lot of environmental concerns over river linking projects in this country. So you need to make sure that how do you, for example, take the case of agriculture. How do you guide agriculture to an area where you are not consuming less water, instead of the kind of water guzzling crops that you grow, and you give them financial incentives? Unless you start pricing water, how can you think in terms of making sure that the water availability is ensured to the optimum level? I think these are all policies that are to a great extent linked to the budget and the budget's expenditure emphasis and expenditure allocations. And I wish to see greater emphasis on the social side of our outlays, and as much as on the economic side of the outlays.
And I quickly mention on health what you was mentioning. Bagita Singh Vinhas once told me that he thought the greatest single impact on agricultural productivity in Punjab was malaria eradication. That had a bigger impact on productivity in Punjab than even irrigation had. I just thought I'd add that to think from
Right. Right. Mr. Desai, Mr. Shetty, Mr. Bhattacharya, aka AKB, all thank you very much for joining us here. Thank you all who've participated for your insightful questions. I hope they've been answered, and hope to see you soon at another Ananta Center convening and bring and have the, for me, have the privilege of talking to such great minds. Thank you so much once again, and goodbye.
Thank you for your moderation. Thank you. Thank you very much. Thank you.